I'm Charlotte McLeod with investingnews.com, and here today with me is Willem Middelkoop, founder of Commodity Discovery Fund. Thank you so much for being here. Great to have you.
Great to be back, and everybody is so positive now this year.
Yeah. We're at VRIC. For context for the audience, it is a very positive atmosphere. What have you been hearing down on the show floor?
Well, it's hard to get in rooms. It's standing room only, and I gave a presentation myself yesterday on the silver short squeeze, and there was a packed room. And I remember 1 or 2 years ago, I gave a presentation, same room, and it was half full at that time. So different vibe.
Yeah, I think people are waking up. I've never seen such long lineups to get in. So let's start with silver, because silver hit a very important milestone just a few days ago at this point, getting to the $100 level. It's kept going since then. So we'll get into what's going to come next. But for you, when you look at what's going on with silver, what's the primary driver that you would identify?
I call this move a silver short squeeze, which is like a technical term known within financial markets and trading. And you get a violent, vicious short squeeze when certain actors in the market are short a position and they need to buy it back in the market because the price starts to rise and they're losing money every day. So, and once you have a short squeeze developing, nobody knows where the top will be. So 100 seems expensive now. That's a large move. But we shouldn't forget we broke the $50 mark, what was it, in December, early December. And that was after we broke from this triple top of $50, which we reached first 45 years ago. And after you break such a triple top, you can expect a violent move. And I think that's why the shorts became very nervous, maybe even panicking, some of them. And nobody knows where this will end, but I'm afraid it won't end with $100. We're already at 110 today. And this could bring us to $200, $300. Nobody knows, but I think we'll see much higher numbers in the months and years to come.
We've got a lot to break down there. And I wonder if we can talk a little bit more about the short squeeze situation, because there's been so much talk in the past about manipulation in the silver market. And I wonder, are we getting to the point where manipulation comes to an end?
Yeah.
Yes.
So that's why this move is so violent. We know that certain actors, let's say the big banks, they sold a lot of unallocated silver positions to their clients. We know that from circumstantial evidence that sometimes people asked for delivery and they couldn't get delivery. So it's well documented by certain researchers. Ted Butler, one of them, he passed away last year. He'd been writing about this, I think, for 40 years. Predicting that one day we would get this huge short squeeze. So it's sad that he's not around because he really predicted this. I became aware of this because I started to follow GATA, which is like, I always call them the financial Greenpeace. They calling for more transparency in precious metals markets. And I started to follow them in the late 90s and met their board members. So I was aware of this for the last 25 years. I've been very vocal about it, been writing about this in my book. And that's why I always called for $100 silver, $5,000 gold. We reached that now, but we're in the first innings, I think, of this short squeeze. So it's not over yet. So there's more to come.
Yeah, I think this is what people are wondering about, especially when it comes to silver. So we're seeing the end of manipulation, and a question that I know our audience is asking is this a new price paradigm for silver? Have we set a new floor at the 100? Yeah, okay.
During my presentation, I said we're entering a new era for the metals, and I call these the metal wars, the start of the metal wars, because we see the price discovery mechanism moving from Chicago, from the west, from the COMEX to Shanghai. This is all well documented. If you look at the intraday price swings, the largest swings are now during the Asian trading hours and not. The West is following the East now. You see a premium in the East, 8 to 10% for silver. So as long as this premium persists, the short squeeze ain't over. And I think certain actors in the West are panicking, and they have to close positions, and they can only close positions by buying back physical silver. And I think you need to pay a much higher price to get enough silver into the market. And as you know as well, it's very hard to grow the silver production worldwide.
Yeah. Maybe we can talk a little bit more about that premium in China. I'm hearing a lot about it. And so you said, if this persists, then the short squeeze continues. Do you see it continuing?
Well, the premium is a great indicator, and as of now, the premium exists, so the short squeeze is continuing, and I also expect the short squeeze to continue because if you study the numbers which Ted Butler always published, and I looked at a chart from Gold Charts Aris, and that's about the open interest, outstanding open positions. And they're still huge in silver and also in gold, but especially in silver. It almost takes 140 days to cover those positions. So that tells me the short covering is just beginning. We're at the beginning of the end, and not this is not the end.
It's really interesting you say that, because when at this conference, we've gotten to the triple-digit milestone, and I'm seeing some people at least talking about, well, now that we got here, I need to sell, I need to take profits. Yeah. So what do you think about that? Is that something you would consider or not at this point?
No. We took I run a fund, Commodity Discovery Fund. We have almost 400 million Canadian dollars now under management. And we took some profits, which I think is normal as a fund manager, but on my PA, on my personal level, I haven't been selling. I have quite a bit of physical silver because I always expected this move. I haven't been selling, and people who are calling me friends, I tell them to wait. Some of them have sold already because people think, oh, this is it. No, I think it's just a start.
Okay. And another question I see being asked a lot here is, what about the silver stocks? So we've seen this big move in the silver price. When do we get that outperformance in the equities?
Great question. And because we don't see any outperformance yet, they've gone up. But yes, the silver price has gone up the same percentage. And so the margins for the producers are exploding. But look, if you look at the valuations of the SIL, the ETF, it's the same rock bottom valuation as early 16, as 2024. So that also tells me we're early in this game. We also see that with the inflow into our fund. There's some healthy inflow, but we have that every year. It's not there's not an incredible inflow, which you normally see at the end of bull markets. So all these signs point to the start of a very strong new bull market. And actually the bear market, the valuation for commodities, the last top of the valuation in commodities in the largest cycle was in 1980. So we had 45 years of declining valuation for commodities. And I expect this bull market to take decades, not years.
Wow. And when it comes to the silver stocks, so we'll see that outperformance at some point. I know we had to wait when the gold price was moving. We had to wait some time for it to catch up. Where would be, so your fund is focused on discoveries, but if people want to take advantage of this coming silver stock rise, where should they focus? Is it?
Well, you should always build a portfolio, and I would say that's what we do ourselves. You take the best producers and you take the best discoveries. But significant silver discoveries are very rare. I only know about 5 worldwide, and they've gone up already quite a bit. I would concentrate more on the producers maybe because, as I said, their margins are exploding and their valuation is still not that rich. And if you look at silver or gold producers as well, Barrick and Newmont, their price-earnings ratio, which shows the valuation, is sub 15 based on forward earnings. So it's still cheap.
And you talked a little bit about silver supply. So I would imagine that producers would want to bring on more supply right now while the price is up. Companies at the smaller levels might want to speed up what they're doing to bring supply online. But it takes a long time in the mining industry to do that. So how long might it take to get that supply response?
Well, from discovery till the start of the mine, on average, takes 17 years. In the US, it takes 27 years. Even in the US, we have some new silver discoveries. Hercules Metals is one name that comes to mind. There are a few more, but most aren't that large. If we look at a country like Peru, Peru is an important silver producer. The silver production has been coming down for years. We see the same for copper in Chile. So higher prices doesn't mean that the production numbers go up right away. It takes a lot of time and energy to find new zones, to open new mines. And don't forget, the larger existing mines are getting depleted. So you need newer mines just to come up for the depletion of the older mines. So I don't expect the silver production to really start moving much higher if we look at the worldwide silver production.
Do you have any concerns about the demand side for silver, because it's got its precious investment side and the industrial side? And, you know, for the industrial demand, I hear concerns about if there's a recession, that could go lower. We're starting to hear about replacement of silver because of the high price. So anything you're thinking about there?
Well, investment demand has been very slow over the last few years. It's really picking up now. So any decline in demand from the industry would be picked up, I think, by investors worldwide. And this is such a small market, and the production deficit is so large. Worldwide demand last year was 1.3 billion ounces of silver. Worldwide production is less than 850 million ounces, so there's a huge gap. We've done some studies, supply and demand, based on historical numbers. We've been in production deficit almost every year since the 1970s, actually. So I'm afraid that the stress in the physical silver market will persist. And silver is a given good, and that means that demand for silver, just like gold, grows when the price is going higher. And that's different from other goods. Normally, when a car gets more expensive, the demand for that car goes down. But in gold and silver, we see increased demand when the prices rise.
Yeah. Well, and let's make sure we talk about gold as well. So we've got a pretty good idea of your outlook for silver. You mentioned you've had this 5,000 number for gold for years at this point. So where do we go from here?
Yeah, that 5,000 was my goal for the last 15 years, I think. So I have to come up with a new goal. I think we'll reach a minimum of 8,000 in this cycle, but I wouldn't be surprised when we'll see much higher numbers. And the reason why is we see more and more people starting to flee out of fiat money. Debasement of currency is so large that we have this permanent high inflation. And people are starting to wonder where they can flee to hedge themselves against the inflation. And then, well, gold and silver are great safe havens. And there's so much money in this world. 400,000 billion is in financial assets. So when more and more of that money starts to flee towards gold and silver, because it's such a perfect hedge, and we're reaching a point that we'll get a monetary reset, and gold might even be reintroduced into the system. Maybe that will be coming from the east, from the BRICS countries. I could envision scenarios where gold is trading much, much higher.
Yeah, it definitely sounds like it's getting more and more realistic at this point. And I know that you pay close attention to the geopolitical side. And I think that is maybe part of what's waking up more average people because they see
Yeah.
the news cycle just moving so quickly. So I wonder, what flashpoints are you watching most closely right now? What's really key for gold?
Well, you have all this instability and tension and pressure building up geopolitically, but also within the U.S. We're near civil war in the U.S. Economy is going down. Real estate is starting to correct. I expect the start of a sovereign debt crisis very soon. Japan is showing the first signs of that. But if we look at the East, I think what's happening within the BRICS alliance and China as its leader, the de-dollarization, is a consequence of the U.S. using the dollar as a weapon. The weaponization of the dollar by the U.S. is now followed by the weaponization of commodities, of precious metals in the East. So that's why I call this the start of the metal wars. So it's a new era.
Yeah, I think it definitely is, and we are continuing to see that distrust of the U.S. One viewer question that we had right in is about Germany and looking to repatriate gold from the U.S. Is there anything you'd share on that note?
Oh yeah, I've been calling for the repatriation of Dutch gold since the early 2000s, and the U.S. And the Netherlands, they repatriated, I think, 1/3 of their holdings, but there's still a large part here in Canada, in Ottawa, because the Dutch royal family fled here in 1940 and they took the gold with them, and it's still here. It's a great story. There's still a lot of Dutch gold with the Federal Reserve in New York, and we know the U.S. has played tricks by, using stored silver for all kind of financial engineering. We know that because Germany asked their gold holdings back a few years, what was it, over a decade ago, and it took the US 7 years to return their gold. And now Germany wants to repatriate the last gold bars, which are still in the US. And it shows a trend that there's a huge distrust. Europe doesn't trust the US anymore. And this all helps to increase the demand for gold and silver. So there's so much, it's like the perfect storm now.
I want to go back to the metals war idea that you mentioned. So we can see how gold and silver play in there. There's the critical minerals angle. Which metals do you think will end up being most important as that's playing out?
Well, if you ask the US, if you ask the Trump administration, 60 of the metals are critical now. And that's out of, we only have 120 different metals and elements in our natural system. So when half of the metals are being called critical, it shows that let's forget about the inflation and the debasement of the currency. Let's forget about the geopolitics. Just on supply and demand, we just have one Earth, and we're depleting our natural resources. And if we look at the supply and demand studies we've done in-house, around 2030 and onwards, there are permanent production deficits in many of these metals. And we knew this for the last 10, 15 years, and we started to invest accordingly. But it's only now in the last 1 or 2 years that the Western countries are starting to wake up to those facts. And I think China was aware of this a bit earlier, and Russia as well. So they're in a much better position now. And all the actions by the Trump administration in Latin America are connected in a way to these metal wars, these resource wars.
How well do you think the U.S. is doing in terms of catching up? Because definitely China, Russia are ahead. They've been working on this for years.
Well, they're very serious now, and you can make the difference in small markets, let's say in the rare earth elements. These are very small markets, so if you can open a few mines or production facilities, you can really close the gap with China, although that's very difficult because in many of those metals, China had more or less a monopoly, not in the mining, but in the refining capacity and production capacity. But if you look at larger markets like lithium or copper or gold or even silver, it will be very hard for the US to become self-sufficient. And if I look at Europe, because I live in Europe, what Europe is doing is all too little, too late. And and that's why Europe still relies heavily on the US.
Yeah, well, I know I need to get you back out to the conference, but before I let you go, any final thoughts you'd leave investors with, maybe on how they can express these themes we've been talking about in their portfolio?
Well, most investors are almost day traders. They want to switch every day. They should look at the larger trends, and I always focus on the larger trends because the short term nobody can predict. So nobody knows what will happen tomorrow. But you can predict what will happen in 10 to 20 years if you look at the major trends, because, we still have an increase of the population. We still see an increase of the people who are moving to the middle class. So you can predict the larger waves, the demographics. And based on these trends, and when you listen to guys like me or people who write books on this stuff, you can become a specialist with some self-study in a few years' time. That's the way I educated myself. I didn't know anything about commodities 30 years ago, because in Europe we just weren't interested in this. Canada has always been a very important country in the world of resources. So I come here to learn. I still learn every day.
Yeah, me as well. Thank you so much for coming on to talk. This was great. Always nice to have you on.
Thank you.
Of course. Yeah. And once again, I'm Charlotte McLeod with investingnews.com, and this is Willem Middelkoop.